just going back to that chart, the S&P
Yep.
chart, I think it's important for investors to kind of just take note of the longer term, right? If you zoom out
Right.
here, so this was the market kind of grinding higher for years and years under QE. There was kind of this
Mm-hmm.
constant kind of printing of money, but it wasn't the stimulus that we saw at COVID. Here's the steroidal push. I call it the steroid surge in the
Wow.
market, where you can see how vertical we went because all the stimulus was getting pumped in. The thought process investors should kind of take away from this is that if Jerome Powell is really removing that from the system, then wouldn't it make sense to at least go back in this longer term
Yeah.
uptrend? And that's kind of the logical thought to me, is that's where we're headed in this market. It probably still takes 6 months to get there, or maybe more, but it makes sense that we would go back to that longer term trend.
This episode is brought to you by Bird, a Binance Incubator Labs participant. Bird is on the cusp of releasing their most anticipated product yet. Showcased at the Binance Labs Demo Day, it's called the Customized Investor Launchpad Score. Bird harnesses the power of predictive analytics to push the Web3 user experience to new heights. Visit bird.money to learn more about machine learning and ethically mined user data via decentralized oracles and APIs. Link in the description below.
If you want to see more videos and interviews like this from influential people in tech, finance, and sports, subscribe to the channel and make sure you hit the bell to be alerted. And go a step further and join the YouTube and membership area for early releases of videos like this. I'm out of here. Ha! It's your boy Crypto Blood, and welcome to another Kicking It session. I've got a returning guest, Gareth Soloway. This is his third time on. I love to have this guy on because he's talking all chart talk, ladies and gentlemen. He's pretty accurate. And welcome back. But it's been a while since we've talked, maybe a month and a half. A lot has transpired. We've seen Bitcoin dip, like you and I talked about. But then we had some unexpected things happen kind of on the fundamental side of things, the geopolitical things. And we saw Bitcoin take a nice rally up. I was really excited to see this happen because I wasn't even thinking about the US and the EU doing sanctions on Russia, and then them, a lot of those billionaires and oligarchs using Bitcoin as an escape ramp, right? As an off ramp out of the ruble. This is neat, man. I love seeing this type of stuff. What's your thoughts on where we are right now? And actually, before we talk about Bitcoin and the crypto markets, we have to talk about what's going on in the regular markets. Powell affirms that the Fed is on track for its March hike. What is it going to be? 25 basis points or 50?
Yeah, I'm thinking it's 25, right? I think originally, before the geopolitical instability, it was 50 basis points, but I
Okay.
don't think they'll do it now, considering the repercussions. I mean, just oil alone going up almost kind of works like a rate hike to slow the economy, because it's a
Yes.
tax on everyone. So
Good point.
25 basis points, I think, is a done deal. The question is, what will they do the rest of the year? And to curb inflation, they have to do a lot. And the question is, if the economy starts to slow, how much can they do without pushing us in a recession?
Yeah, very true. This is breaking news that just came out, actually. It looks like the U.S. imposes new sanctions on Russia, Putin, and oligarchs and their families. So this is very interesting. It's heating up. What's your take on where we go in the stock market from here? I mean, it's been hit hard, actually, from this Russia-Ukraine affair. How are we looking from that standpoint?
Yeah, so I think the biggest thing to kind of keep in mind is that, weirdly enough, the instability globally has helped the market a little bit. And the reason it's helped the markets a little bit is because we basically get in a situation where the slowing of the global economy can slow down the hikes from the Fed, which the market wants. The market doesn't want the Fed to hike. The market wants free money forever, right?
Right.
So by doing that, and in fact, the second you saw the invasion start, and that was the low on the market. And then ever since that point, we've rallied up. Now we're having kind of a flattish day to day, but if you look at the Q's chart here, or the spider's chart, it's very, very clear that we are rallying up because of this instability. And you can see, again, here was the low at the invasion point, and then look at where we've gone on the S&P 500. So I think for the most part, my macro view still says more downside in the stock market. My analysis is saying that if we can get a resolution in Russia, Ukraine, in that crisis, then you'll probably see a relief gap up, and then that'll be the top on the market. And the idea being is that if you get some sort of resolution, then the Fed can say, okay, well, now we can go back to hiking even more aggressively, and that does not sit well with the market. So
Exactly.
yeah, it's a really interesting situation because you think that the average investor is like, oh my goodness, what's going on there? It's gonna tank the stock market, but the market just cares about free money or not free money, and
Right.
everything relates to that and how fast the Fed will move to kind of curb inflation by raising rates.
Very perverse market that we're in, thanks to the
Yes.
Federal Reserve, Jerome Powell, and all his
And I mean,
comrades.
just going back to that chart, the S&P
Yep.
chart, I think it's important for investors to kind of just take note of the longer term, right? If you zoom out
Right.
here, so this was the market kind of grinding higher for years and years under QE. There was kind of this
Mm-hmm.
constant kind of printing of money, but it wasn't the stimulus that we saw at COVID. Here's the steroidal push. I call it the steroid surge in the
Wow.
market, where you can see how vertical we went because all the stimulus was getting pumped in. The thought process investors should kind of take away from this is that if Jerome Powell is really removing that from the system, then wouldn't it make sense to at least go back in this longer term
Yeah.
uptrend? And that's kind of the logical thought to me, is that's where we're headed in this market. It probably still takes 6 months to get there, or maybe more, but it makes sense that we would go back to that longer term trend.
So, what do you think with Jerome Powell saying that they're going to move with care, though? What is that? How do we read into that part, that headline
Yeah,
from
I mean,
Bloomberg?
I think that's him saying, "Hey, I don't want to crash the markets," right? So he's basically leaving that door open. I mean, if this were to develop, and God forbid it doesn't, but if this were to develop into World War III or something like that, he needs that out to say, "Okay, listen, and this isn't the right situation to be hiking interest rates in aggressively." So I think he's leaving himself that little door opening, where just in case things change even more dramatically, that he can walk it back and say, "Okay, guys, this is a big deal. We can't do what we initially thought."
So the issue though with that is, I mean, and I agree with you, but I'm playing this thought exercise about, okay, what if we do go like straight World War III, nukes, and maybe not nukes, but we just go that far, right? We've got like Russia going into NATO countries, and so now NATO gets involved, U.S.
Yeah.
gets involved. What does that look like for the stock market? Like traditionally, back in the day, we would know war meant very good for the U.S. economy. That's no longer the situation. We don't make much anymore. We're more of a service based economy. What does
Yeah.
that mean for the stock market if we go to World War
If
Three?
if it went to that, I would basically look back at COVID, right? So you saw the drop that we saw in COVID, that massive collapse to the downside. I think that's essentially what you'd see again, because if you think about the mentality of investors then, it was that, oh my goodness, the world is almost ending. This could wipe out hundreds of million. I mean, we didn't know at that point what COVID was going to do to the population. We just knew it was spreading fast and it was killing a lot of people. So the market freaked out, people freaked out, they sold in panic. And I think the same thing if you have some sort of World War III. Well, I mean, any sort of World War III-ish type thing, the chance of nuclear weapons being used just jumps tremendously, which really can mean the end of the world, right? I mean, it's a horrendous way to think, but that's the way it is. So it would be a sell everything. Gold would probably soar, right? A physical metal that you could hold in your hand. Silver would soar. That would be what the end game was. And I mean, I really hope it doesn't get to that point, obviously. But I mean, as long as you have sane heads, and that's the big question: is Putin just playing games here with acting a little bit irrational? Is it part of his kind of act to try to get as much as he can, or is there really some instability there? And again, the experts will know better than me when it comes to that.
Hey, I put out a tweet the other day. I said, really feels like Putin got a bad report from the doctors. And he's just going, he's like, I'm giving everyone hell. I'm just going to go
Yeah,
in. Like, it just doesn't make sense. Like, I know he's a tyrant, but like, this seems even outside of what he would do. It just
yeah.
seems so left field, doesn't it?
And not only that, all right. So yeah, you're 100% right. And not only that, but I think he went in expecting like the people there to be like, "Oh, thank goodness the Russians are here to save the day." And I think he didn't expect the kind of the pushback that the Ukrainians have given. And I think that was surprising to him. But I mean, how did he not know that? I mean, you've had the separatists in those areas being fighting the Ukrainians for a long, long time. So, I mean, it does seem it's very unusual for him to make a miscalculation like this. And he has this some sort of warped kind of thought process of bringing back the USSR, the Soviet Union. And it's like, you know how hard it is to, I mean, just Ukraine alone to actually, have troops there 24/7, making sure that you keep it under control. I mean, it's a lot of effort. It's a lot of manpower, and it's a lot of money. I mean, and then these sanctions on top of it. I mean, it's honestly, I don't get it. It sounds like a whole hell of a big mess. But this is his mindset right now, and maybe
I don't think he planned for the sanctions either. I honestly don't. Now, at this point, he does still have, and I read some articles about this. Currently, he does have that revenue from oil. Right. We did not sanction the oil channels, right? The banks that deal with selling and buying the oils.
But
is that next?
Thing is, did you notice that this morning there was a I don't know if it was a news leak, but it looks like the U.S. is really working very quickly with a nuclear deal with Iran, so that Iran can start pumping its oil out to the world again. So the U.S. is trying to do certain things because basically the higher oil goes, the better it is for Russia, right? It's like offsetting some of the sanctions.
Right.
So if the U.S. can figure out how to drop that oil price, let's say down to $85 a barrel, then that's really a lot of pressure on Putin, even more so. So yeah, there's some interesting inner workings here going on, and it's just it's a crazy situation. I mean, I have no idea what the heck's going on.
There's so many moving parts.
Miscalculation.
Yeah, there's so many moving parts. Another moving part, the ruble. It is down to all-time lows against the dollar. I think it's trading 110 to the dollar. This is crazy, man. Like, again, another calculation I think that he didn't plan for. This is all sanction related.
It reminds me at this point, to bring it back around to trading, it reminds me of someone getting in a trade and then not being able to admit that they were wrong and cut the trade, right?
Yes.
So you you get in, and we've all been there. You get in a trade and you all of a sudden you're down $5,000 on it, and you're like, oh, well, I was right. I will not, I will not sell and stop out. And then it just keeps getting worse and worse. But I really think at this point, a lot of it's ego. And that's the scary thing, is once you get an ego, just like with a trader, you don't know how far that can go, where they just do not want to look bad to their people or the world. And it's just it's wild.
Yeah, Fitch has just downgraded, Fitch and Moody's, the credit rating agencies, downgraded Russia to junk bond. And that's another blow, because what he tried to do was raise bond rates to attract more money, more capital in, right? And that just it took 2 steps forward to take 8 back, in my opinion. What you got on the screen there?
Oh, this is the ruble. I just wanted to take a look at it too. What's interesting about the ruble, folks, is that you kind of had this bearish flag pattern. You can see the big drop here.
That's true.
By the way, this was when they invaded Crimea. So the last time the ruble took a dump was when they invaded Crimea. It never fully recovered and has been trading in this wedge pattern. And then look at when it broke. I mean, it was just when it broke. I mean, talk about a sell signal, and look at the drop there. But yeah, just a cool. The charts are just awesome to look at, because it puts things in a perspective of seeing why things were trading that way, and then all of a sudden the news creates the event that triggers the chart to go to its target, if you will.
Right. So let's talk about Bitcoin. That's the main topic for today, ladies and gentlemen. Wow, where are we going from here, Gareth?
Yeah, so I think that Bitcoin is doing what it should do right now, which is chopping. One of the big things I've talked about is how amazing the chart is, that you connect the highs from 2021, and then a parallel line, perfectly parallel, connects the lows from 2021 into 2022. So there's a range here, right? There's a big range, and then you have a secondary range when you connect this orange line to these lows. And it seems like that's what we're doing right now, right? So you hit this line, you went up here, you came back, now you've gone up here. Now we're seeing a little bit of selling, but I think what you're going to do is you're going to go back up and retest it, and then kind of continue to trade up and down. Now, the negative of that is that this pattern, when you drop like this, and then you start doing this choppy action, it's actually creating what we know as a bearish pattern. In fact, interestingly enough, this drop and this choppy sideways action, you could make a case it's starting to create a wedge pattern, and we just talked about it right on the ruble. So if we just flip back to the ruble, and again, I hate comparing the ruble to Bitcoin, but at least in terms of the price pattern, it's kind of the same, right? Here's your big collapse, and now you're starting to trade in this range here. And then my guess is eventually Bitcoin does break lower and goes down. I still have a price target of like 20K or sub 20K, man.
Yeah, I'm right there with you. People were excited and telling me I was wrong and all of that during the rally, but I honestly think the rally was literally it wasn't a technical move, it was a fundamental reason why we saw, and that's something that none of us could forecast, right? Those are
Yeah.
kind of, I don't want to call it, maybe black swan, I guess, but the oligarchs and billionaires needed to flee, and they chose Bitcoin because that was the only thing they could do without any
Yeah.
sanction
And
activity.
the positive thing about that is, I mean, even if you're me and you have like this midterm, 6-12 month target of like 20 or sub 20, the bottom line is that what's going on and how Bitcoin is being used is very bullish for the
Very
long
bullish.
term. So like,
Yes.
yeah, you got to wash out all this crap. I think today now there's over 17,000 cryptos out there, and it's like,
Mm-hmm.
like, you got to be kidding me. How many do we need? 100,000 is going to be enough. I mean, where does it
Right.
end? So you got to flush this kind of weak money out, and then the best will survive. And again, the question is, how low does Bitcoin have to go during that flush, where then the Darwinian, the strongest, will ultimately survive and go higher. But that's my guess, is what you're doing here is you're chopping. You'll create kind of a bearish sideways wedge. Then you'll head down on the chart. You'll break down. If you think about it like this, right? The S&P 500 is down, I don't know, what is it, 10 or 10% or whatever off the
Mm-hmm.
highs. If we get another 10% correction in the S&P, and you've already seen a 40% correction in Bitcoin, you would think that another 10% in the stock market would drive Bitcoin probably down to 20 just by itself.
Right.
You don't have that next leg lower. So again, one of the things I love to show people is the pattern on Bitcoin, right? So let me remove these lines because I want to show this here. I love showing this because this is one of the most powerful concepts to understand. So if you look at the chart of Bitcoin recently, right, over the last year, 2 years, you have this kind of M pattern, right? And then what you want to do is you want to say, okay, well, in history, the .coms are very similar. So go to Amazon. And if you go to Amazon and we flip over to the weekly chart and go back to the .com bust or just before it, the pattern
I
on,
see the
on
M.
Amazon is almost identical, right? So
Mm-hmm.
you have this same M pattern. And then ultimately Amazon went from $112 to like $6. So if
Mm-hmm.
you're waiting to buy Bitcoin, you might get a great opportunity at even as low as 10 or sub 10,000. But check this last thing out. So remember this M pattern on Amazon. Now what I'm going to do is show you the future for Bitcoin. Yes, it could get nasty over the next 6, 12, 18 months. But if we go to the monthly chart on this Amazon chart, look at this, folks. So you know where that M pattern was?
All the way down there.
Right there. So if you want to make a long case, bull case for Bitcoin, is
Yeah.
that, yeah, sure, it's got to have the .com bust and you got to see a lot of this crap washed away. But if it follows Amazon's track, you're going up a hell of a lot in the next 20 years, which is actually what I think is going to happen.
No, that's great. So we talked about what World War III looks like for stock markets. What does it look like for Bitcoin? What does that look like if we go kinetic, like full kinetic, with other countries involved in this
Man,
mayhem?
it's scary to talk about even that scenario. But I mean, if we were drawn into a military conflict, and hopefully it doesn't escalate to nuclear weapons, but I do think then, as it would be a risk-off trade, everyone would rush to the U.S. dollar. They would rush
Yep.
to physical metals. I think especially with nuclear war, or at least the potential of it, you have to understand that the grid could go
Physical.
down.
Yeah.
There could be attacks on the U.S. grid or anywhere in the world, which then, arguably a lot of people would lose access to their Bitcoin. So
Mm-hmm.
Bitcoin could easily see a flush to, I mean, literally 5,000 or sub 5,000. But again, I do believe that it will eventually rise from the ashes if that were to happen. And hopefully not literal ashes, but, will rise and do really, really well.
So you touched on precious metals there for a quick second.
Mm-hmm.
Peter Schiff was jumping for joy.
Oh, yeah.
Gold touched $2,000. Did it touch 2,000 or got very close? Right.
I don't think it got there. It got to about
Yeah.
1975 or
Yeah,
so. But yeah, real
1975.
close.
So
Real close.
what is this telling you? What is gold telling you about the current situation? I believe we were starting to move up. Was it before the Ukraine?
Yeah.
Russia thing. So yeah, let's talk a little bit about that.
Yeah, you already had this beautiful kind of wedge pattern in the charts. I'm trying to figure out where the best line is. Probably this one right here. So you had this wedge pattern of consolidation on gold from the 2018 to 2020 move, and it was just beautifully chopping. You've now had a breakout. I think my guess is at some point you'll retrace to the scene of the crime. That'll be a buying opportunity, which is around 1850 to 1840 on the gold chart, and then off to the races it goes. I think you'll hit this double top. But basically, what gold is doing is it's telling you that inflation is not going away, right? It's telling you that the economic slowdown is likely to come faster than everyone thinks it will, and that'll tie the Fed's hands from really raising rates too sharply and ultimately keeping inflation high. I even just heard that even expectations now are for 3% or greater inflation for the next 5 years. I think it's going to be 5% or greater, for the next 5 years. So gold is definitely a place to be right now. In general, I think metals are. I think silver will eventually play catch up and have an awesome move. And really, what's amazing here is that gold is playing out exactly the way it did in the 70s. So from 2018 to 2020, a big move up. From 20 to 22, a consolidation phase. And then if we go to, check this out, if we go to the 1970s on the chart, I'm going to briefly go back. And history is like, history doesn't necessarily repeat, but it often rhymes. And that's why you want to look at it. But here's the chart on gold in the 70s. From 73 to 75, big move up. Then from 75 to 77, consolidation. And then this is what I think we're starting on gold now, this next big leg to the upside right there. So it's amazing how the 70s had that same inflation we're seeing today. It didn't get under control for 10 years, if not longer. And that's, I think, what's ultimately going to happen here. And therefore, gold probably sees 5,000 an ounce in the next 2 to 3
Yeah, but
years.
in the 70s, Paul Volcker was able to raise interest rates to what, 17% or something like that.
Yeah, and that's the
So
scary
we
thing
can't
about
we
it.
can't do that this
Could you
time.
imagine what the U.S. economy would be if we had 17% interest rates?
Oh my God.
So that's even more bullish for gold and really
Yeah.
eventually Bitcoin. Once Bitcoin matures into a store of safety versus a risk asset, then it's
Right.
very, very bullish for Bitcoin as well.
Right. Well, man, that's
Yeah.
great, man. A great analysis. I hope you guys love that. Make sure you hit that thumbs up. Anything last statements on the current conditions that we're
Oh,
involved in?
wow. I think just be ready for volatility. Be ready for there's headlines coming out multiple times a day that whip oil and whip the markets and whip Bitcoin and everything. So I think you have to just understand that this is a market to be very careful with. Don't commit all your capital to any one direction or any one trade. It's a preservation of capital market right now. Wait for something good to come up before you jump on board. So be safe out there, folks.
I was pretty shocked to see the VIX not really reacting. I mean, it's been creeping up, but I would think the VIX will be much higher than 29 in this environment. Do you use the VIX or at least track it to keep a measurement on volatility at all?
I do. Especially when we were down at I remember when we were down sub 10 on the VIX, and I was just I was shorting pretty heavily. And it took a while for the markets to really roll over. But I mean, historically, you get to those levels, there's something coming. I mean, there's something coming. The market is too complacent. And then,
Right.
yeah, I do think that at some point we're going to see a big, big spike. But right now, the market still believes the Fed can control the outcome. And when the market loses that confidence in the Fed, that's when you will see a 60 or 50 handle on the VIX.
Wow. And we got to an all-time high of 65 back in
Yeah,
March of 2020. That was the peak of that was right in the thick of the COVID
yeah,
situation. So,
crazy, man.
wow. So you think above 65, we're going to take out all-time highs, huh?
I do think so, but just to put it in perspective, that will happen when the markets lose full confidence in the Fed, and that could still be a year out, could be two. We don't know, but there will be some time where people say, "Hey, these guys, really have no clue," and that's going to be kind of the beginning of a reset for the economy and then the financial system.
Lastly, altcoins. I mean, they're going to get slaughtered if the
Right.
pattern plays out the way you're predicting it. What is your take on altcoins, specifically like Ethereum, some of the bigger ones? bigger
Yeah.
market
So,
caps.
so just before I jump in that, I happen to just bring up my chart of the VIX,
Sure.
right? And look at what it did in 2008 and 2009. So, I mean, that'll give you, that's where, I mean, if you have another financial crisis or worse,
Oh,
it
I
is
didn't realize it got up that high. Okay.
yeah, like
Yeah,
you were
yeah,
talking
yeah.
like 90 plus on the VIX. Now
God.
that, I mean, that was all like, I mean, that was when Lehman was failing. I mean, that was some crazy times right there.
And
But
that was the
yeah,
first time the VIX was really, it had been used, but it started to really come to the forefront for Wall Street and a lot of traders to use that VIX, right? In
yes, yeah,
08, 09.
absolutely. And I think what's important here to note too is like, you know, you could see here just before the financial crisis how complacent the market was. The VIX got down to that 10 level or sub 10. And then really you could say again, you know, we got down to that sub 10 level over here. And it kind of predates a big pop. I mean, when you get down there, you know, generally it is a good opportunity to go long volatility. Now, going to Ethereum, yeah, you're right. I mean, ultimately, if Bitcoin is heading lower, if we're going to some sort of winter, yes, you will see a pretty dramatic decline in a lot of these. I think a lot of the alts won't make it, but I think ones like Ethereum hopefully will. I think that Bitcoin, there'll be more than just Bitcoin that makes it.
For sure.
So you know, an Ethereum, biggest thing I'm watching right now is this trend line. If this trend line breaks, that's trouble. As long as it holds, you could see a move back up. Eventually, I do think it's going to break though and head lower. And same thing, I think Solana might survive. I mean, we have to see like which ones are the strongest. And again, same thing, the Darwinian thought of the strongest surviving and thriving. I think that's going to be the outcome when all is said and done.
Yep, there you go, Gareth Soloway. I'll have a link to his information, Twitter, website, and all that in the bottom of this video. Make sure you guys like, share, and subscribe. And that's another Kicking the Session with Crypto Blood. I'm out of here. Holla! If you want to see more videos and interviews like this from influential people in tech, finance, and sports, subscribe to the channel and make sure you hit the bell to be alerted. And go a step further and join the YouTube and membership area for early releases of videos like this. I'm out of here. Holla!